following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Gail in Tampa. Hey, Gail, what's going on?
Hey, love your program. You're amazing.
How long have you been listening?
Oh, my gosh. Well, off and on for about maybe, 6 to 7 years.
Oh.
I mean, just on the radio, didn't understand the TV. And then I go out to Seattle once a year. We have a trading club out there.
Okay.
And then he started talking in class about your book, and I'm like, wait a minute, that's the guy that I listened to in Florida. And then I started watching your TV live, and it's just amazing. I need to become a tiger.
Well, you're already a tiger. See, you've been out there 6 years. See, once you check in to TFNN, you can't check out. It's like Hotel California. It's pretty sick, I know.
No, it's great. And I have some gold I want to try to get over to you, and then I want to buy some coins for my grandkids. So I appreciate what you're doing. I think it's amazing. You're just really amazing. Thank you very much.
Well, I appreciate it. Thank you so much.
Now, Tom O'Brien.
Hi, everybody. Basil Chapman sitting in for Tom O'Brien. Tom is out this afternoon, and I'll be here for this particular hour. I'm part of the team here at TFNN. My service is the opening call. It's a very comprehensive look at the markets every single day, and I send my charts, start sending them to my site at TFNN 6:30 in the morning a.m. Eastern time, that is, and by 8:35 my final Traders Corner comes out, and I include about 14 or 15 bullet points. We might or might not have positions in the TLT or the GLD or the DIA or the SPY or the Qs, but I label them. I show the parameters we're looking at. Very comprehensive report, and as many of you know, for a couple of weeks now we've been very cautious about this market, gone a lot to the short side. I have some core positions that we're still holding alongside. I'm not sure I'm going to hold them much longer at this particular rate, although they've done very well percentage-wise. Now, what we're looking at this particular point is a very important session, and I'll explain exactly in my technique why. For those of you looking at Tiger TV, you'll be able to see very clearly that there are letters, and my particular technique, the Chapman wave, under the umbrella, the auspices of the Chapman wave, there are numerous techniques, but the most critical thing is from the lowest, most obvious low bar, I merely count each successively higher peak. When you get to a peak D, that's where you've got to be careful. It can go higher, but that's kind of the objective in a buy mode, is to go there. Once you get to D and you get your technicals and you get sell signals, you can come down very sharply. Now that I've explained it, you can see my charts. This particular one here, you'll see overlapping charts, but the main chart right here, I'll circle it right there. You're looking at the Dow. The Dow today closed down 156 points. Hey, that's not such a big deal, 156 points. 1.24%, but it's 12,442. And what does that do? It takes it under you see that grayish blue line? I'm not sure how it comes. Let's call it a gray line. That is the 200 period exponential moving average. At 12,475, we closed 30 points below it. And we closed at the low of, pretty much the low of the day, within 2 points. What that says, that at this particular level, I'm going to show you how I'll tie it all together, we can start to look for some kind of a bounce, but it has to be accompanied by other factors. We're looking at a set of dominoes, and to get the one domino to tip over and knock all the other ones, that's one set of rules. But to be able to get them back upright again, you need another set of rules. My expression is always that when you identify that a tide is going out to low tide, you can throw a piece of driftwood out. That driftwood never comes back to shore. It's always being pushed away. That's like going long in a tide that's going out in a bear phase. If you're in a bull phase, every time you throw that driftwood out, what does it do? It keeps coming back to shore. And that means that every time you are going along, there's a really good percentage chance that you'll be saved by the tide coming in. At this particular point, the longs are not going to be saved unless it's very short term and you are looking at a retracement rallies, and that's what we'll be looking at, the potential right here, because the stochastic, that bottom indicator, the red and yellow indicator lines there, down at 3%. That's the equivalent of being at 97% on the upside, very bullish. So this is very bearish, and that means we're getting close. I say that we're within a few days of a pretty darn good bounce, and I'm going to call it a bounce, and I'll explain why as we go on. The S&P is, let me go there. I'll do the charts as we move along. I won't go to the weekly or the monthly. I'll just do the dailies for now. S&P, look, there's that peak D, just like the Dow made that peak D at 13,290s. So the S&P at 1422.38 made one peak D on the 2nd of April, pulled back to 1357, and then look, 4 peaks to the upside, but lower than the previous 1422 high at 1415 on the 1st of May. And now look at this, underneath the 200-period moving average. Why do we make a big deal of this 200-period moving average? Because we've not been there for a long time. You don't even need this moving average until you're getting close by. They're like gaps, and if I have a chance, I'll talk about gaps in a little while. Now, 877-927-6648 obviously is the number to call. Love to hear from you. Let's go to the Qs, 1, 2, 3. The QQQ Trust Series, which tracks the NDX 100, made a peak D, and then just a nominal new high on the 3rd of April at 68.55 to E, the 5th highest peak. Comes down to 64.45, rallies, fails, or call it a rally failure mode, to 67.63, makes a pattern in my CD introducing the Chapman Wave methodology. I talk about the dreaded H. Looks just like a lowercase h. You come down sharply, make an arch formation. It breaks under 64.45, and in the left side, right side time match, I'm actually having a live webinar coming up in June, and I'm going to be talking about all these different techniques. It'll be from about 8 in the morning to 5 in the evening. Not sure 100% of the time, but we're setting it up right now. Look at the left side from that low back in February to the midpoint, that peak E-top to the right side, and it took 2 days. It missed by 2 days breaking that low. That's a nice technique. Look at the inside wedge. That's the inside wedge that I use, a technique that I use that takes you right to that particular point. So that says the Qs are close to 60.96. That's its 9-period exponential moving average. So I'll quickly go through the others. Now let's go to the TLT. The TLT is the 20-year iShare Lehman Treasury Bond Fund. It's in a huge leg D up in my Fibonacci extension. It's gone to a second buy mode to leg D, and it went above the 261% extension that I like, because I always believe that if it gets to 238, it can easily go to 261, and very often it goes even higher. Well, 122.60 was the level to watch. It went to 124.14 today. What does that say? That says in the rectangle formation that I've been talking about on my show. I do a show Monday, Wednesday, Friday, 11 o'clock till noon Eastern Time, call-in show just like this is, and in this particular show I've been talking about the peak E-top that was made in the weekly chart of the TLT at 125.03 with a sharp pullback, and that we should see a rectangle formation, and if the left side 109 area holds, we could rebound and go back to the top. Well, we're doing that, and the MACD is moving very nicely, just crossed positive. I need tomorrow's close, Friday afternoon. I can't talk about the weekly chart until you close out the week. So far it looks like the week is going to close very strongly. We don't know yet. And the monthly chart, this is so important. One of the reasons why I did not want to get into the TBT is because there's this very big sort of a cup formation from the 123.15 high back in December of 08 down to the 87s, 88s lows for the past couple of years, and then right back to 125.03, but it has not closed above 123.15 since December of 2008. If, in fact, the TLT closes above 125.03 to 125.03 is very important, because that was the high in October of last year. That could say you've got a pattern that I call, this is a flag breakout pattern, and that says be careful, because the technicals are still very strong and it actually could go higher. That takes me to the dollar, DXY. And I'll get to gold in a minute. I know a lot of people want to look at gold. In my monthly chart, the dollar, this is actually another one of those pathetic rallies that the dollar's had, if you put it into the context of this huge multi-decade arch formation that broke down from 120, went down to 70.70 in March of 2008. But this is the first time we've actually had the potential to go to a leg D rather than breaking down at peak C or a single leg A. So this is very important, that if this rally continues and in May the dollar closes above 81.78 in leg D, the target would be higher prices to the trend line resistance in the monthly chart, and they could go all the way to 85. That is a huge move. What does that do to the euro? It tanks the euro. What have I skipped? I don't know if I've skipped anything yet. Bonds, TF, dollar, euro, gold. I've skipped gold. We'll talk about that when I get back, and we'll go to bobbing Tampa straight after we get back.